Good morning everyone. It is 30 of August 2022, 7:30 in the morning. This is Euro USD 15-minute chart. Yesterday I tried to short the market down here. I got stopped out. I tried to short back again here, and then I had my position. I had my stop loss at break even and I got stopped out at break even. I believe this resistance could still hold, plus I see market was forming triangle here, push up and then a triangle. This triangle could be a bull flag, which means up, triangle, up. I also see there is a breakout below this trend line here. So this trend line has worked as support, 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 came here, and we can see tested as resistance. I believe I want to take a position short with my stop loss somewhere up here. This is going to be a very wide stop. If I have my stop up here, it's going to be 30 pips, 31 pips stop, very wide. So I don't like the structure of the trade, because for me to make 3 to 1, I mean the market needs to run 90 pips, come down here. I'm going to wait to see if the market is gonna try another attempt higher, then come back down again here. I'll enter short position here with a stop loss up here. Or I would actually short position up here with a stop loss up here. So once the market just pushes up a little bit more, I'm gonna take a short position with a stop loss somewhere here. Trend lines are a very powerful tool if they are used correctly. So you see here in this example, we had this trend line holding a support. We had a breakout below it. If I had a short position here with my stop up here, I would have never made profit on this trade. If I had a short position with my stop up here, I would have scored some profit on this trade. If I had my entry here at the retest area, well, that would have been a completely different trade. So I'll try to get an entry up here with a stop loss here. I have a trend line here, I need to check this. This is a 1 hour trend line and it's a support trend line. This is actually a point of concern here. This is the 1 hour chart. We have this trend line here, we're going to support, 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 breakout, reclaim, test the support, and now we have a second test the support. So I would say market is forming a triangle here. Can I try to draw something that make more sense? Yeah. So there's two things could be done here. Either a long position with a stop here, betting on a break to the upside, or a short position somewhere up here with a stop up here, betting on a break down. Concern is when you zoom out into the big picture, when you get something that looks like this, it's usually before an attempt to reverse. So this could be an attempt to reverse the market up. I think I never know what this is. I would never know till it actually happens because it's a breakout mode. So it can break down or it can break out. So this is here the 1 hour trend line. This is a very tight bull channel. We had a breakdown. We had a breakdown, an attempt to reverse, second attempt to reverse, and this second attempt here would have been a good short. But it looks different in a way because here you could see the market was forming. After the market came out of this up channel, the market was forming a bear channel. This is the difference. Up channel, the market tried to form a bear channel, but we had a breakout of it. So this is different. I want to say the market looks strong. Looks like it's gaining momentum here. From a trading range, market is moving sideways. Two bull bars closing near their highs. This is the 15-minute time frame. I think I want to take a long position. Assuming here that this is a double bottom. You can see it here. And that this market is actually coming up. I'm gonna take a long position, but where would be my entry? I can take an entry here right now. It's above the moving average. Entry here, level stop here. That is too damn far. This is a concern. Resistance, 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 and now I would be taking a long position into a resistance. So basically, because the market is in a trading range, you can clearly spot, I'm gonna clean this, you can clearly spot good long entries, and you can also spot good short entries, because the market's in a trading range, basically. I'll take a short position here. And this is my 45. Taking a short position here is based on the idea that this trend line is working as resistance, and I'm hoping this will continue to be the case and market will come down here. I guess me having a stop loss here would make more sense. If I get a 2-bar reversal, I might open another position down here and trail my stop to down here. I need the bar to close. I need the bar to close. 5 minute 2 bar reversal. Short again here. $20 and $25. This is my 45 risk. I have a stop in this area. My hope this is coming down here. As I mentioned, the bull case. I also have, no, this is another bear case. This trading range here above this trend line, we had a break below it, we had a retest as resistance, and this is like double top second retest. Yeah, the bull case is on a higher time frame. You see the market is holding this as support, fell below it, reclaim it as support, and as long as we're still above it, the market is likely to rally, and it did rally. This is the bull case. I don't like this pattern that's developing right now. 2 bar reversal, take the low and bounce. I just don't like it. It's similar here. 2 bar reversal, take the low and bounce. I mean, I don't know how far the bounce could be, but generally I like 2 bar reversal. Let's go. But it's not about what I like and what I don't like. Here we had a 2 bar reversal, took the lows and very strong bounce. Another 2 bar reversal, pull back, double top, bunch of doogies, 3 bar reversal pattern, kinda a higher time frame. The reason why I added to my position and I trailed my stop close is that I know the average daily range for Euro USD is around 100 pips. Actually, I need to Google this. Average Euro USD daily range. A 100 pips. Over the last 5 years, the daily average range has spent most of its time above 70 pips and has even spent some time above 100 pips. So between 70 and 100 pips. Which means for me to be risking I don't know, around 30 pips on the trade. Like 20 pips on the trade, and for me to make a 3 to 1 means I'm asking the market to move 60 pips. I'm asking the market to come down here. which God knows if the market will come down here or not. I mean, it's a very big move. But now I'm risking 10 pips. I'd say 10 pips. So for me to be making profits, I need to make 30 to 40 pips. Well, that's more doable. 30 to 40 pips. Well, here I can be already taking profits. Here, near this area down here. If my analysis are correct. If not, then this market is just going to keep pushing higher and higher. We had a two bar reversal. We had an attempt to go lower, failed. So basically it's a fake breakout below a two bar reversal, which means we have bears trapped, and then we have an attempt to push higher. Honestly, just looking at this part of the chart, this feels like an uptrend and then an overnight session, so the market is just pulling back because it's an overnight session. Then we're going to have a continuation. Maybe this is going to be the case, or maybe my mind is just playing games with me. I don't know, but I know that taking short positions near these trend lines are usually effective on the long run. So if this one didn't work, it's not a big deal. Most likely my stop is going to be taken out soon, because this looks like it's pushing up. So yeah, if I keep following this strategy over and over again, just finding these trend lines and shorten them, I believe the strategy is working. This trend line is not valid anyway, but it is valid, I mean. But it doesn't dictate if the market is in an uptrend or a downtrend on the 5-minute time frame. Because I say here we had an uptrend, and then we had a very strong pullback, trading range, continuation of the uptrend. We had a downtrend. So basically we had a downtrend above this trend line, which means we can have a downtrend above the trend line. That's another downtrend above the trend line. So we can have a downtrend here. This market found resistance at the 0.618, which honestly I believe, I don't believe in Fed that much, but because lots of traders place their orders based on the Fibonacci retracement, so it could be effective just because you know lots of traders are going to place their orders there. I mean, if this is the resistance level I wanted to short, let's say the market came above the resistance level and reached the Fib, even came just a little bit above the Fibonacci. I have a trend line here. We had a breakout, retest resistance, another retest resistance. So come on now. I want to say that what is happening right now is very typical. Yeah, in the Asian session. So you could see market is grinding here, a lot of sideways movement. Had a push up, again a lot of sideways movement. You can see it's a triangle here. These sideways movement are like what, three hours or over 3 hours of sideways movement. Of course the sideways movement exists in every session, but overall sideways movement exists more during the Asian session. Here this is the end of New York. Asian session, this market was just moving sideways for what? For 7 hours and 30 minutes, and then started to push lower by the end of the session. London guys started buying at the close, at the open. Overall, it's a massive trading range. And this very big trading range has another trading range here. So some traders will be looking to take a long position here. Others will be looking to take a short position up here. Some believe we just came down and right now the market will come back up. Cannot say anything. I would say we are in the middle of the big trading range and we are in the middle of the small trading range. And if I put my trade on the premise of the higher time frame, it would take more time to play out. And when I try to time it on the 5-minute time frame, I cannot usually time it properly. So assuming that I wanted to take an entry here, and I go to 5 minute time frame, I believe, hey, we have this trend line, and we just had a claim, and let me look for an entry. Well, that was a perfect entry, but even without this trend line, I would say that was a good entry because it's an uptrend. High low, high high. There's just a pullback here, outside bar, high 3. Part of me thinking if I need to trail my stop loss to here and add to my position even more. So get my stop loss from up here to down here and add to my position. I guess I would wait. I'll not do nothing, I'll just wait. This is the 1 hour time frame. My trade is in profit, $18 in profit. I lost 2 trades yesterday. I will post them also today. When I look at the market this way, if I cover the entire chart except this part here, that to me does not look good at all for someone who want to be taking a short position. Yeah, if I ask anyone, what is this? They'll be like, that's a bull flag. This is the market pushing up very strongly, flag, and then we're gonna have second leg up. And just for this reason, I might actually reverse my position entirely. Plus, market is holding above the 1 hour moving average. Okay, I took a long position here, and I'm immediately trapped, but I'll just wait. So again, the reason why I switched from a short position to a long position is that this is a very strong bull flag, very strong looking bull flag. I mean, there is no doubt this is a bull flag. You can see it here. Nope. This is another nested bull flag inside the bigger bull flag. So the bigger bull flag is this one. This is the flag. And this is another nested bull flag. Push up. Bam, 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 bam. I don't know. Just doesn't look to me like this market is weak and should be shorted. Yeah, the only screw up is that I have this at 22 pips. So basically I need this market to move around 60 pips, 66 pips, somewhere up here, for me to get to my 3 to 1. That's a very vicious area to trade it. Yeah, it's very hard to trade around this area because you have this trend line here. That's the best entry would have been here. This is again another attempt to break above this trend line and failed. Oh boy, I'm so confused on whether I should be long or short. I think part of it is that the market is in a trading range, and when the market is in a trading range, well, the reason why the market is in a trading range is because there is good setups that looks like bull setups, and then there is good setups that looks like bear setups. And bulls are opening positions, bears are opening positions, and then the market keeps moving sideways. That doesn't look good right now at all. Mm. No, no, no. Not what I want to see after I reverse my position. Damn. Where is my stop loss? It's down here. So now my stop loss is down here. I clearly don't know what's going to happen, but if there's lots of traders are actually looking to short this trend line here, what happens is the market goes up, the market comes down, market goes up, double top, comes down, goes up, comes down, goes up, comes down, goes up, comes down. Here the market goes up, come down, goes up again, come down, goes up a third time, come down, goes up a fourth time, come down. This is the fifth time and it's coming down. So what I want to say is that the market is stalling here. Yeah, the market is stalling around this area here. Part of me thinking I should be adding to my position here and trailing my stop loss here. The overall general market structure for the past 11 hours and 30 minutes is low, high, lower low, lower high. That's something to consider. Low, low, high, lower low, lower high. That's a downtrend. Even if it does not look like a downtrend, it's a downtrend. What does this mean? It means I want to be short even though I'm long. This is so messed up. A lot of levels. This is messed up. Market made new highs. Likely will come try to make new lows. It's a widening triangle. Bounce up, bounce down, bounce up, bounce down, bounce up, bounce down. That could result in a bounce up, hopefully. This is so damn tight. Very tight range. And how much confliction in my head based on there is good short setups and there's also good long setups, as you can see here. Oh, that's a good short setup. We get to this trend line, you go short. That's it. That's all you need to do. Also, let's see. Also on the 60-minute time frame, this looks like a bull flag. You see this pattern, what do you want to be doing? Going long. What do you expect finally happening? A breakout. Which means ultimately, just because it's a bull flag, I expect a breakout of this trend line here. This one here. I expect a breakout of it. Expect the market to come back and try to retest, which hopefully will work as a good support and continuation. But just the idea that this is a bull flag indicates that likely the market is going to break above this trend line. And I have a stop down here, so that's it. I see here there is more bear bars than bull bars. So there's 1, 2, 3, 4 bear bars, 1 bull bar, 1 bear bar, 1 bull bar, 2 bear bars. So I believe there is more bear bars in this formation than bull bars. Also here, more bear bars. I'm just totally not comfortable with this setup. Just want to make sure my risk is actually what I want to be risking, which is 45, because I don't want to risk more than that. Yep. So this is what I can control. What the market is doing here, this is I cannot control. Well, market has reached the 1-to-1 RR, which was up here, which means I will not let this trade come back to negative. If this retracement came all the way down, I'll close at break even. Okay, so let's review this trade. I took a short position somewhere around this area. Market ended up coming down, but I closed it at a break even. Here. This was the short position. I closed it at a break even because I believed this is a bull flag. You can clearly see it here. Bull flag, and I entered. Sadly, I had a terrible entry. I did not know the market is coming back down here again. If I knew the market is coming back down here again, I would have taken an entry somewhere here or even somewhere here. I mean, it's a bad entry. I entered too early here. I entered at resistance. Well, I may have waited and just longed a double bottom, But what happened is that I did not want to miss out on the trade, and I believed it will break out, and this bar here at a certain point looked so bullish. It was a big green bar, and I thought it will be a breakout. Anyway, the market ended up coming back down very close to my stop loss, very close. Just I don't know, just like 1 pip far away from my stop loss. I remember I wanted to get my stop loss up here to below this wick and add to my position size, and if I did that I would have been stopped out. So thankfully I didn't do that, and we had a breakout. It's a breakout of the bull flag here. I believe this market is coming up. If I would do anything differently, I would have waited to take a position down here. Thing is, I did not know. Let me assuming that this is the flag. I'll put it here. So yeah, I had no idea the market is coming back down again. So yeah, at this point I believed two touches here, market came down, touch here, market came down, two touches here, market came down, touch, touch, market came down, market pushed back up again. So that was the third touch. And I felt like the market is stalling here below this trend line and does not want to come down, and was holding above the moving average. So we have this 20 moving average here, and the market was holding above the moving average. Every attempt to break below the moving average was quickly rejected. And then this was a breakout below the moving average. I was sitting in front of the chart, I was watching this, and I'm saying, oh, I'm screwed, the market is coming lower. Market made a micro double bottom here, a third push down. So what happened is that one push down and then push up, second push down and then a push up, third push down. So this is actually a micro bull wedge, and from there this was the breakout here, these two candles were the breakout of this micro double wedge, micro wedge bottom, and at the same time it's double bottom here, and it's a double bottom with this one here. It's basically a support area, and I placed my stop loss immediately after this. Well, I wish if I had an entry just near the support and my stop loss a little bit further. Right now what I see, the market push up, push down, push up, push down. This could be a flag. It's an inside bar followed by another inside bar here. So that's an II. Could be a failed final flag before an attempt to go up that would fail and come down. Again, I tend to analyze so much, and I know it's all like uh, you see a pattern, and I think what is more likely to happen when I see this pattern. So what's more likely to happen is that market could try to push up higher and then fail and come back down. On a 1 hour time frame, the market still looks like it's at this resistance area here. You could call this a breakout, failed breakout, not you call it. That's a bull bar, very strong bull bar, closing it at its high, near its high. Usual, I would expect another bull bar follow through. So you have this bull bar here and then another one follow through. The thing is, I have a plan, so I don't need to make random decisions. And the plan is, once I get to one risk reward, I'm not gonna let this trade come back to negative. I'm gonna put it here at break even. So I have my trade at break even, and I hope this is gonna turn back around and keep going higher. One concern is, let me take a bigger picture. One concern is a lot of times after we have a flag, which is this flag here, a breakout, market comes back down again to test the flag before a continuation. And if the market comes back down to test the flag, I might get stopped out at break even. But at the same time, I don't want to close and take profits here because it doesn't make sense. Because what if the market finds some sort of support and turn back around? I'm just gonna sit and do nothing. I believe this is the best thing I can do. Stick to my plan. My plan is, once we reach a 1-to-1 risk reward, I move my stop to break even so I don't lose nothing on this trade. If the market goes to 2, I might close, or to 3-to-1 risk reward, I might close. That's it. I see this pattern here on the on the 5 minute time frame. Let me try to find something that looks similar. Yeah, so market is also near top of this small trading range. Now I have my stop loss here. You see how this move is very similar to this move, similar to this move. If market comes back down here, might find support. I hope it's not gonna come back down here, or to just take another 2 legs up. For me, this looks like another bull flag, honestly. 15-minute time frame, 5-minute time frame. From top to bottom of the move is here. Again, from top to bottom of the move. You see there is symmetry in the market. Here this move is more extended. Put it around the close. Well, yeah, this move is more extended. This move is about a similar retracement to these two. And then we had a similar retracement here. So if the market was to retrace, I could expect something back down here. Hopefully it will not come down to that. Yeah, London opened at 9 o'clock. Right now it's around 10:30. So London has been open for 1 hour and a half. This is yesterday's London open. There is push up, retracement, and the rest is history. Push up, retracement, and I believe there is a chance if this here is this. I don't want to be closing the trade just yet. Thing is, here we did not have a major resistance area. There is no major defined resistance area. But here we have this resistance area immediately here, this top of the trading range. I hope this is not gonna stop it out. I hope this is gonna keep moving and moving and moving. Something I want to talk about. I read it in a book for Al Brooks, and this is my understanding of what he wrote. You have a pattern. Let's say I'm playing a bull flag pattern, and then I have the flag, and then I have a breakout. And if you spot this pattern, you have a higher probability going long here than going short. So this is like maybe 60% more likely to break to the outside, to the upside, than to break down. But there is exception. If this trading range if this trading range here goes to be more than 20 bars, the chances drops to 50-50. So you don't have a 60% chance anymore. So you have bull spike, you have a bull spike, and then you have a trading range that lasted over 20 bars. In this case, this trading range lasted 44 bars, 3 hours and 40 minutes. The chances are not 60-40 anymore. The chances are about 50-50. Could break to the upside, could have a bull breakout or a bear breakout. And this, of course, depends on the time frame. So if I go to 60-minute time frame, and I was playing this pattern here, that this is a bull flag and is likely to have a break to the upside, well, from the moment I got the buy climax, which is here around this bar, around this bar, I had a buy climax. Till the bar that was before the breakout, that's 18 bars, which means 18 hours, but 18 bars on the 1 hour time frame. So the chances are likely this pattern will break to the upside than to the downside. Now I'm assuming that this is a bull flag, this is the buy climax, and this has been going sideways for 13 bars now. So it's still relevant to the bull flag. There is a chance, like 60% chance, that this is gonna break to the upside than to the downside. And again, just a probability, 60% or 40% still a big probability that we can break to the downside. That means if you do it 100 times, you're gonna get around 60% chance of breaking to the upside. That's all. I have to go to work now. My position is going to be open. If it hit my profit target, so be it. If it doesn't, I think I'm going to close it if it comes back down here. Yeah, but I have to go to work, so I'm gonna finish the video now, but we'll post it later.